$1 billion has been liquidated from crypto exchanges in the last 24 hours, the lion's share being Ethereum liquidations totaling $345 million. The pullback that we saw yesterday for BTC was brutal. Brutal is just putting it gently. $1 billion. I saw a stat that the liquidation event that we saw yesterday, and again, Bitcoin only sneezed 4% down. It's not even that big of a move. This liquidation event rivals the March 2020 Corona crash in terms of liquidation volume. Now, we need to talk about a couple of things. Ideally, you want to know, is this a good time to buy the dip or not? Now, while everything I'm sharing is my own personal opinion and it's not to be considered financial advice, I personally am looking at this as a buy the dip moment. I'm going to share a lot of charts with you, a lot of information as to why I think that is the case. But before I do, first off, where are my manners? What's up? My name is Aaron Dishner from The Better Traders, and you are watching Coin Bureau Trading. Go ahead and subscribe. We are inching closer and closer to 100,000 subscribers, and it only happens because you subscribe and you share our videos with friends and family members that are interested in crypto trading. So subscribe, join me and my co-host Dan, as well as Gabby, who's live streaming. She just had a live stream with Annie from Trade Travel Chill, which is, boy, I mean, she picked a username. That's a tongue twister. I'm serious. Okay. But say it 5 times fast. Go ahead. I'll wait. No, I'm not going to wait. So Bitcoin had a massive pullback of 4% yesterday. This move was accompanied with a ton of volume, nearly 2 times the average of volume. But the big thing that happened was the fact that the price of Bitcoin made a new all-time high and simultaneously dumped almost 6% in the same candle. Falling back over here to the TBO fast line is a great sign of strength. The fact that Bitcoin did not close inside of the cloud is a good sign. But I'm going to tell you now that if the price of Bitcoin closes inside of the cloud, it's not going to be pretty. We're probably going to see a repeat of all this price action from late July into early August. I don't want that to be the case, but we need to be aware of that. The main thing I keep saying over and over, whether it's on my YouTube channel, on my posts on X, like on these videos, we always want to focus on the macro trend. And the macro trend right now is up. So we need to, I'm approaching everything with a buy the dip attitude. So why did Bitcoin fall so far? Maybe it's because a lot of late longs were entering the picture. Again, we get a much clearer picture of Bitcoin liquidations here on CoinGlass in the last 24 hours. But really, Bitcoin longs that were liquidated, only 162 million. Compare that to Ethereum's 268 million. The demand, in my opinion, I mean, the market's led by Bitcoin for the most part, but the demand is really favoring Ethereum right now. But I'm getting ahead of myself just a little bit. One big thing that happened is that the CME gap that was open here, let me get the exact price, at $118,405 was successfully closed on the CME with this pullback. To me, that's a major win. That's a great sign that Bitcoin can slowly recover and go back up. The fact that we saw Bitcoin not only make a new all-time high, but just a couple of days ago on Monday, we saw a nice upper wick right here, which took out all these resistance levels. We saw the move on Wednesday going up, making a new high. Yesterday, making a higher high. Like, things are still really good. And if you look at the timeline, it's literally in shambles. People are ready to throw in the towel. People are ready to freak out and give up. People are already calling a top where we're not seeing very many top signals at all, in my opinion. Some of them are getting closer, but we're not really there yet. So let me talk about Bitcoin and Ethereum's relationship, because I think this is going to help you understand why I'm still bullish right now. When we think about Bitcoin, we think about scarcity, 21 million coins, there's no CEO, and then there's Ethereum. Ethereum has a CEO, it has an inflating supply. A lot of people love Ethereum though, and many companies, Tom Lee of Fundstrat, I believe, is the one that's going really crazy over Ethereum, saying it's going to go up to $25,000. Gosh, if only I've never been in crypto before, that would sound so amazing and so promising. Yet I've been here for such a long time that I've heard these ridiculous pie in the sky price targets that are completely unrealistic. unless the United States makes Ethereum the reserve currency of the US. That's the only reason I can really see Ethereum pumping that hard. But the main thing you have to know between these two is that there is a very clear relationship. So I'm going to go ahead and do a little bit of an example, okay? We're going to do a Bitcoin B. We're going to do an Ethereum E. When things are really bullish, what will typically happen is that these two, Bitcoin and Ethereum, will take turns. Now, this is historically accurate back in 2017 and also back in 2020 and 2021. Bitcoin might move up 3%, and Ethereum doesn't stay very far behind. It will also move up, but maybe not perform as well. Sometimes Bitcoin will fall down a little bit and Ethereum will fall down a lot more. That's normal market mechanics. That's something that I've already shared on this channel, which is called the multiple factor effect. But what's been happening for the most part is that Bitcoin moves up and Ethereum follows. Bitcoin moves down and Ethereum follows. But right now, what's actually happening is that the roles are being reversed, where Ethereum is very strong bullish, leading the way, and Bitcoin is following. Ethereum is falling a little bit, Bitcoin follows. But really, right now, we're looking at a very huge role reversal, and that is super evident in Bitcoin dominance and Ethereum dominance. Now, we know that Bitcoin dominance is near and dear to Ben Cowan's heart. I made a video about Bitcoin dominance, explaining it on the More Coin Bureau trading channel, More Coin Bureau channel recently. That's a great video that just helps give you an understanding of why Bitcoin dominance, stablecoin dominance, and Ethereum dominance, or others, are really worth paying attention to. But the main thing that you need to know right now, Bitcoin dominance has been in a very strong bearish trend, really ever since about this week, okay? So the week of July 14th, so it's like 4 weeks ago, we saw a big drop of almost 6% in a week for Bitcoin dominance. That is huge. Now with this indicator, we can see these blue diamonds right here, which are TBO closed longs. They let us know that the bullish uptrend could be changing into a bearish downtrend soon. So if you're in a long position, you haven't taken out profits yet, consider doing so. That's basically what it means. But seeing two of these on the weekly is a big deal. Not to mention the fact that it's inside of the cloud, which is bearish, just like Bitcoin being inside of the cloud on the daily time frame will be a bearish signal. But I want to go back over here to Bitcoin dominance to talk about something else that's really important. Now, Bitcoin dominance has been falling significantly. And the main thing, again, going back to Bitcoin's chart, we're focusing on the slow line, which is the slowest moving average. It's actually starting to curl downward. Anyone that's yelling, oh, no, that's it, the market top is in, we're all done, isn't paying attention to this. The fact that Bitcoin dominance didn't even pump when Bitcoin fell down 4% yesterday, that's an amazing signal. Now, where did dominance really go yesterday? It went clearly to stablecoins. We saw an increase on stable.c.d, up 4%. Combined stablecoin dominance saw an increase of, again, 4.4%. But the real magic that's happening right now is that Bitcoin dominance not increasing on a 4% pullback for Bitcoin is huge, because that's what we've been seeing for the last 2 years. And things are starting to finally change in favor of Ethereum. This is honestly something I would never have foreseen me talking about a year ago. Absolutely not. Because you guys have to understand that yes, Ethereum has been on an incredible tear. But if we just go back a year ago to August, like we saw Ethereum dominance up here at 15%. It fell all the way down to 7% of the total crypto market cap. Not to mention losing 53% of its value, but August 2023 to April, if we go over here to September, here we go, August over here. Oh, that's 2024. From this point, August 2024, down here to April, we saw, again, the price lose 45%. And that's being generous. I'm not even measuring from $4,000 down here. We saw Ethereum pull one of the worst drawdown periods it's had basically since the bear market, only for it to rise up like a majestic phoenix, and now it's on the verge of pushing up and testing and breaking above its all-time high at 48.68. there has been a huge shift from Bitcoin to Ethereum, and dominance is telling us the entire story. Now, before I talk about some charts and things that I'm looking at in terms of buying the dip and those kinds of setups, I want you to check out the links that are in the description. You guys are awesome. You're liking videos, you're leaving comments, you're subscribing, but clicking on these links, signing up for these exchanges also helps us as well, as Dan mentions every single day when he posts a video. So, first off, check out Femex. There are some incredible rewards. There's some copy trading signals that I've set up for Solana, SPX, and SUI. We've been having a little bit of technical difficulties, I guess you could say, but I'm pretty sure that I've worked out a good solution and things are working well there. There are also non-KYC requiring exchanges like 2bit and CoinCatch. 2bit says a 9K bonus, but really you can earn over $30,000 in exclusive benefits, which is insane. CoinCatch, you can also trade to earn bigger bonuses. There are actually way more deals on the Coin Bureau website. If you go to coinbureau.com, hit the deals button, the first thing to check out is the Coin Bureau Club, which is a private Discord server where Dan, Guy, and Nick are posting a lot. They're sharing insights and observations on the market, not to mention charts and chart reviews, coin picks, all that kind of fun stuff. There are other exchanges, other tools to check out. Plus, there's a link for you to save 10% off of our course at The Better Traders, 15 Minutes to Financial Freedom. This is an amazing course that helps you understand how to navigate all of these up and down markets. And the way that I'm trading it right now is winning. It's the way I've traded every single pullback since 2023. I swear to you, it's just been rinse, repeat over and over. And the stuff that I teach in the course is how I trade, and it's served me so well. Now, I actually want to go over here to give you a live picture of this. This is the AllTrade platform. This is the best third-party trading platform I've ever used. There are many out there, but AllTrade is, bar none, the best. So I really love AllTrade because you can actually connect multiple exchanges to AllTrade and use it as your central control tower for executing trades, not just automated bot trades, which is what this is. So here on SUI, you can see these yellow arrows right here. These are active orders. I bought way up here at the top, bought some more, and I bought some more down here. But the reality is that I didn't do the buying. The bots did the buying. And the reality is that most of us struggle with big pullbacks. I mean, SUI fell from 416 down to 365, losing 12% in basically 24 hours. It's bouncing right now. And the reality is that by buying the dip using bots, I've actually averaged down my entry, which will do two things. One, I'm going to close out in profit without having to wait for the price to go back to my initial entry. And two, because I'm scaling in with more size as the price falls lower, I'm actually going to be making a whole lot more money, whole lot more profit when this bot actually sells. It's a beautiful strategy, again, that has served me so well. I'm sharing this with you on purpose because I want you to understand this concept and how we approach a buy the dip strategy for pullbacks. Now, before I get into it, we know that Bitcoin dominance is falling. It's strong bearish right now, and I believe it will continue to fall. If Bitcoin dominance will be falling, and it started from 66%, now it's down to 59%, if it continues to tumble, dominance has to shift somewhere else. And it appears that it is shifting towards Ethereum dominance. And I fully believe that Ethereum dominance will lead altcoins to push higher. Look at the numbers right now. This is no different. Stablecoin dominance is overbought short term. It's going to be falling. Bitcoin dominance continues to fall despite Bitcoin having a pullback. Where is dominance shifting? Even after an extremely red day, charts down 10%, some even down 20%. Where is the money going? It's going back to Ethereum. It's going back into our top 10 tokens, Solana, BNB, XRP, Doge, ADA, SHIB. It's going into the others market cap despite, again, a really nasty pullback. If we look at just a handful of these charts right now, we should be seeing much more red and fear on a big fat pullback. Again, let me just pick a chart. Height is doing really well right now. But yesterday, from wick to wick, it was down 10%. This really doesn't have any business pumping after such a devastating day. Again, how much money was liquidated yesterday? Do I need to bring this to your attention? And yet we see a chart like this going back up higher. Okay, let's take a different one. Let's take Cardano. ADA had an incredible day yesterday because of some exciting news about an ETF filing. Pumping wick to wick, 16%, closing 2% on the day among a sea of literal blood. It doesn't have any real reason or purpose to be doing this other than the good news, but that's insane. That is literally crazy. Solana, I could do the same thing. We saw Solana not just close up here at $200, it actually moved up even higher to make a local high at $209. Despite having a nasty pullback of 11%, it's not falling more. Let's take some of these charts and apply the same DCA strategy so that way we can understand how I approach. Let me just say it differently. I'm going to share my DCA strategy with you. I'm going to explain why I use it, how I use it, and how it helps me to protect my portfolio and also to make more money on the dips. But before I do, if you haven't liked the video yet, like the video. All right, this will be easy. The first thing I want to do is I want to identify charts that were already previously strong bullish. Why? Well, if I'm going to be picking a chart that has been looking shaky already, like Toncoin, I'm not really going to have a great experience buying the dip on a coin that's already been kind of flat or struggling to have a strong uptrend. Another chart that I could pick is like XMR Monero. Unfortunately, they're undergoing an attack right now, as far as I understand from what I'm reading about them. But again, this is not a chart where I want to be buying the dip. Not just because of the attack, but look at the price action. Even without all the indicators, with all the measurements, it's still a strong bearish chart. It doesn't make sense to buy the dip on a chart that just keeps dipping. So I'm going to use the TBO, but you could also just use a moving average. You could use a moving average ribbon. You could use all this fun stuff. But really, the TBO is just basically for moving averages, and it works really well. So again, another example. Aave, this one had a pullback yesterday, wick to wick, from our top to our drop, as I like to say, 10%. But was the previous price action really strong bullish? No, it wasn't. We can clearly see, even without indicators, it's just going up and down, up and down. What I'm saying here is that you want to focus on charts that were previously bullish when you're using a buy the dip strategy. It works out so much better. For instance, Bitcoin Cash. Bitcoin Cash, even without indicators, has been on a very clear uptrend. It's just making these nice moves, but you can tell the trend is up. So when we have a pullback, Bitcoin Cash has held its uptrend so well over and over, making this a really good chart to trade, in my opinion. We can apply a moving average, and like the TBO, like I said, we can find entries. But what happens if we get an entry like this and the price keeps falling down lower? Let's talk about strategy next. And we're actually going to use the chart of SPX 6900 because I love it so much, and it's doing basically what I'm talking about right now. So we know that the chart of SPX 6900 has been strong bullish. It unfortunately fell from 240 or so and 228 down here, losing 37% over 6 days, which is massive. And it had a nice recovery. These are the kind of charts you want to find, having a big pullback and a nice recovery up higher. So what I want to do for charts like this is I want to wait and identify levels of support. I can see back over here. I mean, this is using the indicator, so I see that there's a support level here at $1.51 or so. But let's say that we don't have any indicators, we don't have any drawings, we don't have any help. We're just looking at a naked chart. I know, turn off the lights, everybody. It's getting spicy. What I like to do is I like to identify support levels. There's clearly support based off of this low here and this low here. So this is an easy buy. But what happens if SPX, instead of going all the way back up 30%, falls lower? Well, I'm going to make sure that I don't enter in with my full size. I'm going to add some here, and I like to personally use 2 DCA orders. So this is going to be DCA 1. And sorry, it's going to be DCA. It's going to be my entry. It's going to be my entry order right here. So my entry order is going to use 1/7 of my total possible size. This is the way I do it, and I've always done it. It just works really well. I can't draw sevens very well. I have to do it like this, don't I? So 1/7 of my total possible volume means it's a very small amount. I think it's around 14% of the total size. Now, what happens is that if SPX falls lower, rather, let me say it differently. I want to prepare myself for the possibility of SPX falling lower. I don't expect it to, but just in case it does, I want to be adding more. I'm going to add more here at this support level, and here I'm going to add another level. And I'm not going to put in 1/7. I'm actually going to be putting in 2/7 here. So actually, my total size here will be 3/7 at this level. And you've guessed it. If it falls down even more, like down here to 90 cents or whatever, then right here, I'm going to put in the last remaining order, which will be 7/7. So basically, to summarize with easier numbers, this is my lot of 1. This is my lot putting in 2. And down here is going to be my last order, which is going to be 2 times that, and it's going to be 4. This is the way I've always done it. This is the way that the bots are pre-programmed to handle drawdown. And the best part about this strategy is that you're never going to be overexposed. Think about it. Buying the dip can be risky. You don't know if it's going to be the dip, or is it going to be the next dip, or is this actually the dip of the dippity dip, right? So by using a DCA strategy, I'm slowly scaling in, reserving 6 parts of my full size, or rather 6/7 of my full size, okay? So this is actually a great way to do it. Again, let's use numbers. So this first order, I'm putting in $100 to buy SPX. Again, this is all fictional. This is all for educational purposes, but let's say I bought $100 worth of SPX here, but the price goes against me. Well, I still have $600 down here waiting to buy SPX. And the magic of DCA will cause my entry order to go down lower. I'm going to use a different shape right here because this is a lot easier to visualize. So this is my average order entry. So what happens is if the price of SPX goes lower, my average order by doubling down doesn't get brought down to this level, but it's somewhere just above that level. But the beautiful part is that if we get a drop down here to like $1.22 and the price goes back up to where I initially bought, I'm actually in profit because I've averaged down. And you've guessed it, if the price falls even lower, guess what? I'm averaged down yet again. So I get some sort of crazy nice average, super duper lower, good grief, a lot lower than the current prices, or rather my initial entry. This is essentially DCA strategy, and this is how I buy the dip. This is how I have the confidence to buy the dip as well. Now, another thing that you can consider doing as well is keep your eyes on Ethereum for further moves. Right now, I fully believe that Ethereum is literally propping up this market. It's almost like the NVIDIA of crypto right now. It just keeps going up higher. The reality is that with Ethereum approaching overhead resistance at 48.68, there's a little bit of a I hope this goes well kind of feeling. I do expect it to push above. I do expect it to make an all-time high. But right now, if the entire market is propped up on Ethereum's shoulders, and we know that Bitcoin dominance isn't increasing, and Ethereum dominance is the one that keeps snapping back higher, if we see a big pullback on Ethereum, will that result in a big increase in Ethereum dominance? Sometimes it has happened that way, but usually Ethereum dominance follows the price. There isn't as much conviction, I guess you could say, between the price action of Ethereum and Ethereum dominance, whereas they should be inverted. The price of Ethereum goes down, there's more demand because people want to buy the dip, so Ethereum dominance should shoot up. We don't always see that happening. So that's one point of hesitation where this all could go really wrong really fast. But still, even though there are no guarantees, this concept of DCA trading has served me so well, honestly, since 2019. So the main thing I want to leave you with, yes, I believe that this is still a great market for buying the dip, but you need to know what you're doing. You can't just buy the dip blindly and just never sell. Always look to take some profit out on the bounce. At least that's what I do. I like to sell at least 50% of the position on the bounce, the return back to my original entry price. But that's me. It doesn't have to be you, but it's, again, served me really, really well. Now, I understand that a lot of this is a little bit like, whoa, this got a little bit crazy. Don't worry. I've actually talked about bot trading and DCA bot trading strategy on this channel before. I want you to watch this video next. That's going to help you understand how DCA bot trading works and to give you some more tips, tricks, and ideas to get started. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.